Kenya's population is approximately 50 million. Experts from PricewaterhouseCoopers say if 19 million Kenyans are taxpayers and 6 million from the 19 million Kenyans remit their taxes, then this time in this 2023-2024 financial year, the government will collect 7 times more than last year.
Tax revenue collection and broadening, the tax base would tremendously increase, say by 7 times. Which would, of course, then generate economic growth for the country.
In what may look like a public discontentment from the proposed tax measures, there are pockets of gains from the Finance Bill 2023.
We've also seen the reduction of the rental income tax. This is probably one of the very sort of favorable provisions that we've seen for taxpayers that has come down from 10% to 7.5%. But the flip side of that is that now you have to pay it within 24 hours. Now, this is obviously very highly impractical.
Economists and tax experts from PwC have, however, warned that if the bill passes in Parliament, Kenyans will be forced to dig deeper into their pockets to pay taxes and sustain their livelihoods.
Half our jobs are going to be working for KRA because all you're doing is filling in forms and remitting taxes on a daily basis.
Why would you levy excise duty on bottled water, for instance? Why would you levy excise duty on airtime? Yet it's become very critical, or data. It's very critical to how we do business, how we interact as a society. So excise duty to me doesn't seem to be the right tax for that kind of a consumption.
The new proposals comes even as questions abound on the imposition of VAT on some services that were previously not categorized under VAT. Services such as trading in cryptocurrency have not been properly legislated in Kenya, yet the same has been enshrined in the Finance Bill.
The digital assets, we're talking about non-fungible tokens and basically cryptocurrencies. And the platform owner would be required to withhold that 3% and remit it to Kenya Revenue Authority. There are probably low chances that platform owners are going to do this or are going to get involved in this.
I've now seen the proposal to pay taxes within 24 hours or in some instances within 3 days. This might be administratively very cumbersome for taxpayers, and this is one of the proposals that we probably would need to review together with the members of parliament. Media
owners as well are set to lose approximately 30% of their income stream.
The margins on advertising are very thin, so if you take 5%, it really does affect the cash flow for media owners. A lot of media owners then would be in a negative position in cash flow.
If Parliament passes the bill, then the taxes will take effect starting July 1st, according to the National Treasury. Linda Koskei, K24 TV.